That's yours, and it likes the box, so you don't need to turn it on.
You know, the easiest thing to do is
And where will you sit? Just second. Okay. I will put this on. And yeah, feel free whenever.
They might, yeah. Just give that one to the guy as well. Pardon? What we'll do is we'll put in this one as well. And so if there is a Q&A, then okay.
Sorry, I don't really last, but we're stealing your gum.
Red has it. Red
Yeah,
picked up
that's
the mic
it.
and then left.
All right, I think we'll get started. We might have a few people trickling in. I hope everyone had a lovely evening last night. I certainly did. Got to meet plenty of new faces. We met last night at the dinner and it was great. And yeah, I'm excited for another day of some really, really interesting panels and topics. And To kick us off, before we start, I would like to begin by acknowledging the Bunurong, Bun, Wurrung and Wurundjeri Wurrung peoples of the Eastern Kulin Nation, traditional custodians of the land on which we're meeting today, and pay my respects to their elders past and present. I extend that respect to Aboriginal and Torres Strait Islanders here today. So our first panel today is all about is it Regtech or Regtech? I always get that wrong. Regtech, there you go. And it's all about focusing on the customer journey. And here with us today, we have Andrew Jackson from First AML, Brett Hodge from Finergo, Erica Villanueva, I'm sorry, Erica, that's terrible of me, from Assurance Lab, and Jacqueline Pan from RTS Global. And moderating the panel, we have Deborah Young from the Regtech Association. Welcome.
Thanks very much. Well, welcome everybody, and we're well aware that it's the Barocca session after last night's drink, so we do appreciate the fact that you were here. So I'm Deborah Young, the CEO of the Regtech Association, and for those of you that aren't familiar with us, we are a non-profit industry body, and we represent around 170 organisations from around the world. About 110 of those are Regtech companies, and that represents about 20% of the global pool of Regtechs. So I'm really delighted to be here today and have this fantastic panel. And we're talking about a customer journey, and using journey as a little bit of a theme, we're going to take you along a little bit of that journey this morning. And interestingly, joining me on stage today are 4 members of the association from New Zealand, and the companies were founded in New Zealand, Singapore, Australia and Ireland, so we truly have an international group here. So what would be really useful before we get underway, could I have a really quick, super quick show of hands if you can tell me whether you are a FinTech or a Regtech? Great. Financial institution? Oh, we've got a few. Great. Regulator? Excellent. Welcome. An investor? No investors? And advisor? Okay, so mostly FinTechs, Regtechs, financial institutions, and we have one regulator. Welcome to you all. So today we're going to give you a bit of an overview of Regtech and how a series of specialist firms have emerged to support financial services and the customer journey. And we're going to give some unique insights to each of these companies and their specific risk mitigation role. We're going to start with a few personal journey points, and then we'll quickly get into the customer journey that you're all here to talk about. And we have tried to structure the panel in a bit of a logical order, kind of a Regtech value chain, and hopefully that will become obvious as we go through. But one of the interesting things that I found in researching my panel is that there is a tie that binds them all. And as I introduce them, I'm going to mention what that is, and it was quite unexpected. Welcome, Andrew Jackson, First AML. Andrew has a pedigree in customer success, head of sales in technology arenas, to his current role as country manager for Australia for First AML. I also discover in researching Andrew that he is a travel blogger. Now, just bear with me on that point as I introduce Jacqueline Pang. Jacqueline is a seasoned C-suite executive with a strong track record in financial services, including in asset management. Jacqueline is now a co-founder and managing director of the Singapore-based Regtech RTS Global. And Jacqueline is our well-travelled overseas visitor, as she's part of the Singapore delegation that's currently here for Intersekt. Welcome, Jacqueline. Erica Villanueva. Congratulations are in order for Erica because we have FinTech royalty with us. She's fresh from her win as the female FinTech leader of the year that she won about 2 weeks ago. So congratulations, Erica. Erica has a background in risk management, and she is the co-founder and CCO of Assurance Labs. And this theme continues because Erica is a volunteer at a hiking organisation. So bear with us as I introduce, last but certainly not least, this is not Brett Hodge, this is Owen Keating. Owen has stepped in for Brett, who wasn't able to be here for family reasons. But Owen is the Regional Director of Sales for Finergo. He has a deep technology background in Ireland, UK, Europe and now Australia. And the theme continues because I happen to know that Owen has just completed hiking the Camino in Spain and France. So he's done some recent hiking. Welcome, Owen. So now what I'm going to do, and I'm going to mention the time, which will hopefully keep all the speakers honest and also me honest. I'm going to give you 30 seconds each. If I can have a brief intro to your personal journey to Regtech and how you found yourself in the Regtech industry, and I'll start with you, Andrew.
Thanks. So my journey was one unexpected. I didn't really know much about Regtech. I was working in SaaS, selling email marketing to financial and professional service firms. And the opportunity to join First AML came along, and I saw a growing industry, but also by getting involved in an anti-money laundering move, I could help have a proper impact on wider society, because I think it's an unknown or an unappreciated piece in money laundering, how prevalent it is, and society doesn't really see where it comes from and how it impacts them. So any little thing that I can do to help is kind of what got me excited about the role and the industry at large.
Yeah, great work. Jacqueline.
So hi, I used to work and head up investment operations and technology with asset management companies, and used to get frustrated when I had to do regulatory reporting because there were really no tools or few tools, right, and none at all for complex regimes in the marketplace that I could deploy. So one day it dawned upon me that this was a great commercial opportunity. And I decided that I realized that I could build solutions that I would want to use as a practitioner. And that kickstarted my Regtech journey.
Thanks, Jacqueline. Erica.
So I started my journey at PwC, performing IT audits for the likes of IBM Westpac. I also have some experience at RBS working on one of their biggest remediation projects. So I've seen kind of like firsthand the human impact of what happens when regulations are flouted. I've also worked in sustainability, so reviewing recycling and water projects. So I guess Assurance Lab kind of like allows me to bring all of that experience and passion for ESG together by allowing us to perform, cybersecurity audits and also ESG. Bringing all of those skills together for me.
Thanks, Erica. Owen.
Good morning, everybody. So I've been in Finergo for 3 years now, but I actually worked with the founder of Finergo, Mark Murphy, back in Ireland 13 years ago. And I saw the growth of the company over the last 10 years. I've been living in Australia, from 4 people in Dublin to over 1,000 people now in 15 offices globally. And the purpose of the organization of really protecting, financial services firm from a regulatory perspective, but also helping improve commerciality, client experience. So Mark approached me 3 years ago and asked me to join the Australian entity, and it's been very exciting, and we're continuing to grow at that pace, which is fantastic.
Yeah, thanks everybody. And I think this underlines the Regtech industry is made up of, a real powerhouse of people with deep knowledge and subject matter expertise. And that's what I find very enriching and enlightening in the cohort of fantastic people that are around me every day. So what we're going to do now is we're going to ask each of the organisations to actually talk about who their primary customer base is, what is the problem that they are solving, and what are the impacts that can be achieved by each of these solutions. And once again, I'll go in order. Andrew.
So in Australia, our client base is anyone in the financial service space, so anyone who's regulated by the Anti-Money Laundering Act. We specialise more in the complex side of anti-money laundering, KYC, so know your customer. So anybody who is onboarding investors, onboarding clients, and has to do that admin-heavy, burdensome process of due diligence. So if it's a simple retail consumer customer, a lot of that can be put through straight through processing technology, but where technology stops is where it gets into the murky, complex world. Maybe there's overseas funds. You will really want to get into the nitty-gritty of who you're working with if you want to work with them at all. And that's where we come in. So we remove that admin burden. We streamline what we can through technology, but we're backed up by a team of specialists who don't put anything back on our clients. They just say, okay, well, we'll uncover whatever you want us to, and then we'll present the entity or entities to the business to say if they want to or don't want to work with them.
Thanks, Andrew. RTS Global, Jacqueline.
Yes, so our company has got several products, including transaction monitoring, ESG reporting, as well as shareholding disclosure. And today I'll talk about shareholding disclosure, which is our flagship solution. So, shareholding disclosure is a global and complex problem faced by institutional investors such as asset management companies, superannuation funds, insurance companies, banks, hedge funds, and basically any financial institution that has equity related interest in capital markets. It is also one of the regulatory regimes that has the harshest of penalties. Failing to comply can lead to penalties that go beyond hefty fines to jail term for directors in some of the jurisdictions. There are altogether 100 plus jurisdictions that require shareholding disclosure. And there are subtle differences in the regulations across jurisdictions. So let me just give you a couple of examples. Each jurisdiction will define the level at which you will have to report and aggregate your shareholding. Now, is this at the group level, the entity level, the fund group level, and in some jurisdictions, multiple levels? Okay, another example would be in the calculation of the percentage of shares for your denominator. Do you use total outstanding shares, total voting rights, class outstanding shares, class voting rights, or some other value? Now, these are just some of the permutations that you have to contend with. There are many others. And every single one of them needs reading, understanding, tracking in order to be in compliance. So, to top it all off, in a single jurisdiction, there could be multiple rule regimes. For example, in Australia, you will have substantial shareholding disclosure for long positions, and you have a different set of rules that apply for short selling, for takeover, for sensitive industries, and so on and so forth. And all this is covered by our solution. We deliver a simple solution that makes it simple for you, and it basically works with out of the box rules. And if assuming data is ready, you can just pipe it in, plug and play. Setup is minimal, and our rule box is highly configurable and user friendly and can cater to everything that you need. Yeah, so that pretty much sums up shareholding disclosure and the solution that we bring to the market. Thank you.
Thanks, Jacqueline. Erica, can you identify your customer base and the impact that your solution is having, and a little bit about your solution?
Yeah. So the problem we're really trying to solve is trust. In Australia and all around the world, we've got a lot of SME SaaS companies who have great products, but in order to sell their products, they need to build trust with their enterprise customers. And one way of doing that is by performing audits. So, for example, great products. If I'm a bank, I won't really want to onboard you unless I can trust that you will keep my customers' data safe. So we help SMEs build that trust by providing, auditing them against kind of like a SOC 2, ISO 27001, etc. And we, perform those audits in an SME-friendly way. So we do it without disrupting your business. We really work with the SMEs to make sure that, yes, they're ticking off kind of like the requirements, but in a way that suits their business and doesn't just become an admin burden. And of course, we use Regtech to facilitate all of that. Audit work is not always glamorous and fun, so we try to automate all the boring stuff out of it. So yeah, in the end, it makes it a lot easier for us, a lot smoother for our clients especially, and it allows them to build trust with their customers, enter new markets. If you're in Australia and you have a SOC 2, for example, you want to expand into the US, that really gets your foot in the door. If you want to go to Europe, for example, you're going to have to comply with GDPR. That's something we help with as well. So it's really about enabling SMEs, helping them build trust with their customers through an audit report that's transparent, so that they can, build trust that, yes, we will keep your customers' data safe, pretty much.
Yeah, so great. And I think what's really interesting about what you're saying is we often think about Regtech potentially just having applications to large institutions, but here we see that there's applications for small to medium companies as well. Owen.
Yeah, great. So Finergo offers client lifecycle management to financial institutions. So we only operate with financial institutions, and we sort of say we're an inch wide, but we're a mile deep. And what we do from a regulatory perspective is we help look at things like AML, KYC, tax, OTC derivative reform, investor protection, risk, and the likes of ESG, which is becoming quite popular. So we look at financial institutions and we help them with any client type. So it could be an institution, a corporate, it could be a retail bank or a wealth, across any event that may happen. So the onboarding or the opening of account, or the maintenance or the ongoing due diligence, or the offboarding of those accounts. And that's what we call client lifecycle management.
Great, well done. So what we're going to do for the next 10 minutes or so, I have a very long list of questions, and you may as well have some brewing, and we will allow some time at the end for those questions. But it's a question, and I'm going to encourage the panel to talk to one another as well as to you. Let's see how we go getting through this very long list that I have here. But one for all of you to answer. What's your view on the greatest challenge that you are seeing from a client's perspective that has a hard impact on them being able to serve their own stakeholders or customer base? And I might flip it the other way and start with you, Owen.
Yeah, so look, absolutely. I saw there's a few people here from banks and financial institutions, and dealing with the ever-changing avalanche of regulatory requirements is huge, right? And the impact that has on client experience and operational efficiencies and trying to stay up to date. So what Finergo have done, a lot like yourselves in the Regtech Association, is very much a community approach. So compliance by design. So how can we, mutualize that cost of staying compliant by working as a group together on how to stay compliant, how to manage the compliance, and then what Finergo does is we come in and automate and straight through process a lot of that through the platform.
Thanks.
Yeah, I think on that compliance piece, I see a number of firms who try and take on too much internally, and I understand it can be a very confusing landscape out there with all of the technologies. If you look at a website for a technology that's, say, very different to us, it might seem to say they do exactly the same thing as us. So it's sometimes people don't know where to look, and that not only slows down their ability to keep up with the compliance changes, but it slows down the experience for whoever their end customers are. So I think we as an industry can probably do an even better job at working out where we have complementary and competitive offerings. So then we make it clearer for firms out there that we work with, okay, this is what you need to look at to make your investor onboarding, your client onboarding more pain-free, but to protect your business as well.
Spot on. It's an ecosystem approach, but you're absolutely right. It's identifying how that ecosystem works together.
Yeah, and I totally agree with Owen, right? I think the biggest challenge is how do you keep on top of regulations? How do you apply those regulatory changes, right, to your data? And, what kind of, are you able to meet the reporting timelines? Are you able to mitigate risk? And, it's not just about customer experience, right? It's also about, are you managing your reputation? Yeah.
It's similar in the audit space. So there are lots of different standards that big enterprise customers, I guess, demand from their vendors. And a lot of this is according to their geography, but there's actually quite a lot of overlap. So for example, GDPR has a lot of overlap with CCPA. So I guess what we do for our customers is we perform just the one audit. We make sure we, we understand where the overlaps are. Cover the edge cases, but in terms of our customers, they only have to do the audit once instead of getting two separate audits, wasting time and effort, kind of like providing the same thing twice. So we really try to blend the standards, blend the audit approach to really recognize, make the most out of those efficiencies and overlaps between the different standards.
Yeah, thanks very much. And just on some of the earlier points that were made too, I think that's the power of being part of an industry body like FinTech Australia and like the Regtech Association, in that it can help that peer-to-peer sharing and learning and collaboration. So fantastic to hear. Now, I'm just conscious of the time. It seems to fly by really quickly, so I'm going to cherry pick from this list of questions, and I do want to talk about ESG, but I might open up with a question here about what's the right way to think of return on investment when it comes to Regtech software. So for the people in the room that might be thinking about that investment, how should they be thinking about that? And I might ask you that, Erica.
Yeah, I guess for us, when we get approached by our clients, it's because they've been asked for a SOC 2 report. So I guess there's one way to just get the audit done. But actually, if you really put in the time investment in it, you can get a lot more out than just simply having an audit report. So you can use the opportunity for real process improvement and really get your SaaS company to mature to the next level. So if you want to make the most out of it, don't just tick the boxes. Really, actually invest in the process and see it as a way to your organization become more mature and be better placed to, to face increasing number of regulations if you've set the right foundations.
Yeah, I think I'd also say firms have to be open to looking at, if they're going to onboard a piece of technology, looking at what their costs are right now and not just saying, oh, well, it's a sunk cost because we've got someone who does that for us. It's like, well, what else goes into making sure that you've got redundancies if somebody is ill? How do you manage that person? What do you do if you grow? Because it's not just Regtech isn't just a line item, say, okay, it's going to cost you 50 grand a year, and oh, well, we don't have that budget.
Yeah.
So we speak to a lot of firms and say, let's actually get into the costs you have now and the challenges that come from that if it falls over, or say if a business wants to grow. It's not just, we want to sell you something, so here's a bit of money. We truly want to add value, but you have to understand where your business is at that time and place.
Yeah, spot on. I think getting to the root cause of what's actually causing the cost to go up. And a lot of times it's looked maybe from the outside, but not what's underlying that, such as the need to collect all these data and documents and the need to stay compliant. So you're absolutely right, Andrew.
Yeah, can I just add also that there is always the intangible cost to consider. So, I was talking about risk, right? I mean, there are not enough compliance expertise in the market. How are we going to deal with a regulatory landscape that's just evolving faster and getting more complex? And if you don't have solutions, right, like what Andrew was mentioning, to do the heavy lifting, then how are you going to deal with, right, the complexities that really needs, right, the human brain to think about and deal with? So is that included in the ROI? I think there needs to be qualitative qualifications as well, right? When we look at the numbers, so that we see things in context when a decision is being taken. Thank you.
Yes, thank you. I'm just conscious of time, and we do want to allow enough time for questions, but I did want to just kind of finish the formal part of the panel on a question of ESG, because I think ESG is going to have growing impact in the RegTech industry, and indeed on the whole idea of a customer journey. ESG is playing a very critical role in institutions right now across an entire spectrum, and that includes things like attracting key talent, giving shareholder value, engaging customers who are highly tuned to climate sustainability and good governance, tracking and mapping of ESG exposures to, achieve specific goals, and RegTech can help with this. So if I could just quickly get 30 seconds from each of you, do you have some insights around the role that RegTechs have to play in upholding, a very strong ESG framework? Owen?
Yeah, so I mean, we did a survey last year of our clients. We work with some of the largest institutions in the world, and ESG came up as number one. So from our perspective, there's a lot of a similarity with what we do with the likes of KYC, and similar DNA in the collection of that data and the documents, reusing data in the market, and being able to offer the clients the ability to look at their customer base, to be able to assess the ESG rating and to be able to onboard them, whether it's a mandatory process like the SFDR in the EU or policies here locally to help with that. So it's quite a big thing, but it's definitely the biggest thing going forward.
Great work.
I think one of the biggest risks with ESG is greenwashing. A lot of companies may talk about their ESG credentials, but as we find out more about these greenwashing, people get, I guess, what do you call it? What's the word? I guess they don't trust it anymore. So I think the role of audits is really key in that. And for us, in terms of like the market that we serve, a lot of the sustainability standards are out there, like SASB, ISB. They're really focused on the big end of down. But just because you're a small to medium business doesn't mean there's anything there's nothing you can do around ESG. So we've actually developed a framework that's kind of like suited to that, so you can make steps towards it. And similar to what you said, Deborah, a lot of enterprise customers are actually looking down their supply chain, and you can definitely use it as a differentiator. It's where SOC 2 was 10 years ago. So you can use, yes, I'm secure, and also I've got ESG, and it's been audited, so you can trust that this is actually what I'm doing.
Yep. So I think I was reading up on ESG, right? And they were saying that by the year 2025, 53 US dollar trillion of assets will be under some kind of ESG mandate. Yep. So I think this is going to be a huge playing field. And definitely there's a role for Regtech. I think Regtech, our roles are to, our solutions are really for transparency, for consistency, and for reporting, right? And that is really at the heart of ESG if you think about it. And and I'm sure as the regulations evolve across different jurisdictions, again, there's going to be inconsistencies in the regulations. There's going to be differences. There's going to be market data. There's going to be data gaps. Now, how are you going to deal with all that? And as you migrate from your existing ESG policy to the regulations, I would really suggest that have a look around at the solutions that are in the market that can help you to do that.
Super quick response, Andrew.
No. I'll pass the time over to you so we can get some other questions, because I just completely agree with what everyone said.
Great work. So are there any questions from the audience? Otherwise, I have a lot on my sheet here, and we can get a mic. We can get a mic down to you. Thank you.
Just sorry, Jacqueline, to your point and to the audience, do you see a consensus being formed around ESG? Because there are many different frameworks or bodies that claim ESG frameworks, but there isn't a consensus yet. Is an ISO standard being formed? Do we see that there will be at least a Western version of a consensus of what ESG compliance does look like?
I mean, seeing how regulations have evolved, right, in the past 30 years, it will take time to come to consensus. And I think it will just be sprouting out sporadically across different jurisdictions, right? And that typically there will be certain jurisdictions that are frequently aligned. For example, I noticed that Australian and Hong Kong regulations are very close. Yeah, but I think it will take time for us to come to a global standard, as in all things.
Yeah, and I think on that, firms shouldn't wait for regulation standard to come around. It's the same in the AML space. So right now, it's only in Australia financial institutions regulated, legal, accounting, real estate. They're not regulated. It doesn't mean that firms shouldn't make sure they're doing their piece to stop the money laundering, but to protect their business from financial and reputational risk. I think the more firms can do right away, and then they're already ahead, so they'll start to influence that regulation as opposed to waiting for it whenever it comes around.
Yeah, absolutely. And I think our association is putting quite a bit of time and effort into the whole area of ESG and helping everybody to unpack that. And early next year, we'll be launching a new series. It's like an education series around ESG, and inviting people to come in and to learn from some subject matter experts about how to begin to unpack it. But also from a Regtech perspective, how do you speak to an institution now? Because potentially you could be speaking to a whole new audience within an institution. So they're climate people, they're sustainability people, when previously you may have only been speaking to their pure compliance or risk people. So it really does open up new opportunities for new conversations, which has, a quite profound impact on the title and that's, that protection of customers at the end of the day. So I think we are right on time. So I wanted to ask the audience, thank you very much for being here at our Barocca session this morning. And I wanted to ask you to join me in thanking my fantastic panel. Thank you.
Yeah, it's already on. It's already locked. You're ready to go. No, I haven't turned it off right now. But yeah. Because we know you've left them. I think pretty much, there'll be intro here for you guys. Yeah. So Rachel will intro, and then you'll be the host.
All right, if everyone could start to take their seats, we'll get started in just a minute. All right, I'm going to get started introducing our next panel as we all find our seats. I've just realised that you guys are all in black and white. Very well done. Love it. And our next panel is all about open fund. Oh, no, it's not. I skipped one. It's all about the real value in payments. I was like, these guys are all from payments. Joining us for this panel, we've got Demir from Basic. We've got Katrina from the NPPA. We've got Carolyn from Zepto. And moderating the panel is Samantha O'Brien from DLA Piper. Please welcome our payments panel.
Hi everyone, I'm Samantha O'Brien. I will just get my panellists to put their hand up so we know who, you probably know who they are, but let's just make sure. Katrina, Demir, and Carolyn. I just heard the previous session call themselves the Barocca session. One of my panellists, I won't name them, was talking about a fillet of fish they consumed last night. We're not going to call ourselves a fillet of fish session, maybe the bacon session. So welcome to the bacon panel session. And the topic you can see is the real value of payments. So let's get going. We've only got half an hour. Maybe we'll give us some time for questions if we can. Just the concept of value can manifest in many different ways, and kind of like art in a way, sometimes in the eye of the beholder. Value can be because something's rare, because something's got utility, because something's important, and for a product or service, value could be because it enhances your own products or services, saves you money, makes you money, lots of different ways of kind of coming at what value is. So for a start, I thought I'd ask our panellists from their perspective what they thought the value in payments was, and to who. Maybe Carolyn, you can kick that off.
Yeah, I would love to. So the value of payments for me, and why I've been in payments for so long, and I'm pretty obsessed, a bit of a payment nerd, is that I have a belief that we are heading into a world that is a consumption-based contextual commerce experience. So if you think about the subscription economy and consumer behaviour, what's driving the uptake in this subscription economy is that people don't want to pay for things they're not using. People want to pay based on their consumption. They want to do that in the context of everyday living, in their everyday activity. And the only way we can really create this kind of passive payment environment or micro payment environment is to make the payments frictionless and have them disappear, and have it in a safe, controlling way for consumers. So if you think about assisted living and taking those binary tasks out of my day-to-day, my fridge will be able to order my groceries from me, my car insurance will go up when my kids get in, when they get out of the car insurance will go down, the car will deliver a parcel for me while I'm at work. If I walk past the television and there's an outfit that I want, I'll be able to talk to the television and the Iconic will send it the next day. I'll pay for energy as I use it. I'll pay for media as I use it. and everything else. So for me, the real value in payments is that assisted living, bringing that rich quality time back into my life and taking away those binary tasks and decisions around payments and not paying for what I don't use.
Thanks, Carolyn. Demir, what about you? What's your take on the real value of payments?
I would like to extend on what Caroline said. I look at it a little bit different. If I think about it purely from a consumer's point of view, I think we're in a really exciting time at the moment. We've got this great intersection of having all of this range of different kind of capabilities when it comes to payments, and also finally we've got this incredibly rich set of data as well. And what we're seeing and what the world of kind of possibilities tomorrow will be is that finally these two things are not going to be done in isolation. So you're not going to be doing data in a separate exercise to executing an actual payment. When you broker a payment experience, you're going to be brokering the data and the payment itself. And the moment you've got two, all of a sudden you've got a continual stream to real-time data access, and you've got the ability to execute payments as well. And we pay two in real time also. And I think combining those two things all of a sudden really changes the actual dynamic. If you think about it from a consumer's point of view, bringing that context into the world of payments means that if we take something as archaic as direct debits, and they've stood the test of time, but if you think about them, one thing that I was always kind of amazed is that once they're set up on the 20th of every month, they're just going to blindly take money out, unbeknown to whether you have sufficient funds, whether you have income that's going to arrive, whether it is even appropriate to actually take the money or not. But with data and that overlay of the context, all of a sudden we can determine when is the best time to actually take the actual funds out. We can determine whether this individual, if they are in a repayment plan, whether they can afford it, and if they can't, then let's kind of automatically put them on a repayment plan that'll help them kind of ease and clear their debts as well. So I think really all of this, what this is going to provide is a brand new kind of category of payment services, particularly in that kind of passive space. So no more will we be required to surface something in front of a consumer and require them to kind of push buttons. It'll be a one-time setup. And as our behaviors change, as the context of data, as things change in our life, we'll be able to use those trigger points to initiate payments.
Thanks, Demir. And Katrina, Demir kind of mentioned kind of value being around customization and context, and part of that being kind of speed and agility. Kind of what's your take on real value? Is that where it's at, or is there more to it?
So I kind of start with what payments are really about. I try to explain to my kids. They say, "Mum, what do you do?" I say, "I make money move really fast." And I think actually payments is really about the outcome of an action that we do. So it's, it's because I want to purchase a good, it's because I want that service, it's because I want electricity to power my house. And it's really the outcome of those decisions. And I think value in payments will come when we make those kind of processes as seamless as possible and better, as Demir was saying. And I think part of that is kind of the customization, taking some of the friction away from what we see today, and making that a bit more seamless. And I think we're kind of on the cusp of seeing some real change as it relates to payments here in Australia, because of new capability that will make them not just fast, because I think fast has kind of become the new normal. It's like, well, what do you mean it's not fast? I mean, what do you mean I have to wait 2 days? I mean, I think it's about making them better, making them better from a data perspective in terms of the data that can go with that from a reconciliation, better from a fraud and a safety perspective. How do we protect consumers and merchants and other people involved in that payment process? How do we make actually the process itself more efficient? So if I'm a business and I want to make my payroll run or do my supplier payments, how do I do that more efficiently? And so I can get paid faster, or I can pay someone else faster. And the fact that it's always available as well. So, kind of the concept of 24/7.
Can I just add something to that? And it's something that I hear Demir say often, which is data-driven payments, which is kind of the preface of Basic's whole piece. And I know we say that real-time payments it's going to be BAU, like it's we're all drinking the same Kool-Aid, so we completely get it. But I think the additional benefit in the real-time payment piece, coupled with the data, means that the metadata that comes across and the access to the information within that customer's funding source, so their bank account, actually allows them to make frictionless in-the-moment purchase decisions based on their own data. So we're actually giving them insights in the moment in a frictionless way to make financial decisions and empowerment. So I think the real-time thing, it's BAU, but it's game-changing for the data that can come across.
And I think it's not just the data they get with the payment in terms of what they can do with that, but I think it's also knowing immediately the outcome of a payment. It's the certainty. It's knowing that payment was successful, not having to wait 2 days to actually know there was a problem, and now I've got to have an army of people to manually try and fix that. So I think it's about that kind of real-time kind of notification and the outcome and the certainty as well, and that's when we'll start to see some real efficiency gains.
Thanks, guys. And look, it's exciting. The speed and agility and kind of customization is kind of really exciting. And I mean, I'm sorry here, my lawyer, so I have to bring a little bit of the kind of negative into play here. But let's, with every product and service, kind of there's a risk around, the customer experience. And so I guess, just want to kind of understand from you guys, and the customers here also, they're businesses and consumers. So there's a different kind of customer set as well in terms of stakeholders that we've got to get this right for. Interested in your perspective, maybe kind of just come back to you, Katrina, about whether the correct settings are in place to kind of increase the incidence of use and kind of avoid erosion of confidence of the payment sector.
I mean, I think it's always a fine balance between how do you kind of deliver a better customer experience, but how do you also ensure there's sufficient safeguards and kind of protections in place as well. And, sometimes you don't get that balance right, and sometimes it's too skewed one way or the other. But I think sort of as an industry, we're really focused on how do we make payments better and safer for consumers and businesses. And so by being able to do things like, for a pay to authorization, having it in channel, and I'm actually authenticating myself when I have to do that within my banking channel, using capabilities like Pay ID where I can actually see who I'm paying before I make that payment. I hate making a payment using a BSB account number now. It just drives me insane because I'm like, did I get the numbers right? Okay, let me check it. Let me check it again. It takes me about 10 minutes and it's just like, and then you still don't know and you don't even know if it's gone through. So I think it's really about how can we ensure that we're doing everything we can to help protect both consumers and businesses to make it better. And I think that's an ongoing journey as well. I don't think we're there. I think it'll continue to be something we have to focus on because, certainly, some of the scammers are getting much better at that and it's a constant kind of battle. But I think it's really about how we make sure there's that right balance because you do need to have safeguards in place. I mean, things like if you're actually touching money, moving people's money around in real time, then yes, you probably need to have some sort of regulatory standing, I think, in terms of to make sure that you are, kind of fit for purpose for that.
Yeah. And look, I'll come to you, Demir. I've got a question for you, Carolyn, but I'll come to you, Demir, first on that because you spoke about kind of the value of data. And I guess this is where there really is a kind of bit of a concern, potential for concern kind of in end users, right, about kind of security and use of their information. Do you think we've gone far enough in terms of the measures that will give that confidence? Is there more to do? And kind of what are the measures that are in place now?
Yeah, look, I think so one thing to kind of note on, both from a payment and both from a data perspective, with the new Pay to capability and with from a data perspective for the wonderful work being delivered through the CDR program itself, is that both of these technological solutions acknowledge whether it's authorization or whether it's a consent, they're actually integral and part of that network and execution as well. So it's not like it was put onto the side, it was actually brought right to the beginning and it underpins the entire data exchange or the entire kind of like payment setup. The part that I'm kind of really excited about, and I think what we've done really well as an actual nation is the CDR. So the whole kind of mandate around kind of consumer data rights. One of the parts that I love, particularly as a technologist, is that even from a legal element, just the way the framework is set out, I think we've struck a really good kind of balance between commercially what we want to be able to do with the data and also how do we protect the consumer as well. And if you look at the way we exchange data at the moment, for the little checkbox, I approve, and all of a sudden your data is getting sucked out and going kind of everywhere. CDR addresses that head on. So the entire kind of concept around it is like, let's put it right in front of the consumer. We acknowledge that there's 4 key elements in terms of a consent. What is the purpose? What is the data that you need? What is the time period? And who you're going to share it with? And I think that that's kind of critical and it forms the contractual basis of when interacting with this. The only thing that I'll kind of say is that but because we are introducing these new concepts, the one part that I can foresee being a little bit challenging is that we've got Pay to MPP with its authorization framework, and then we've got data with a separate consent framework, but there's one consumer. So, and it's one interaction. So how are we going to bring that together underneath the one thing? I think that's going to be a challenge.
Oh, that takes me to kind of the question I had for you, Caroline, in terms of like, yes, the protections are all there. Kind of, yes, we've got this kind of exciting new speed and agility. Are there some consumers that you're going to leave behind? I'm thinking about my parents and just talking about, checks were the problem. Checks were the things I hated to do. Now we hate doing BPay, but my parents are probably still prefer to write a check. So are we going to keep, are those types of consumers going to be kind of there to take up this innovation?
Something we think about that a lot. So even though Zepto is not a B2C brand, we empower other payment companies and merchants to deliver the experiences. We do play a role in offering what we believe is best practice when it comes to consent and that payment piece itself. So we did some research last year around two key areas, one being how consumers feel about open banking and in particular Pay2, how they felt about Pay2 as a new payment mechanic. And there was a lot of resistance at the start of all of these surveys around how people were feeling about Big Brother and my data and what are they going to use it for, and is it going to affect my credit scores and who has access to the data. But as you talk through the actual use cases of what the data will allow you to deliver, so financial literacy, do you really understand what you're spending? Can it help originate you in a mobile app or in a financial situation so you don't have to complete all the forms again and do all these pieces again? And then for Pay2, wouldn't you like to know the money's gone immediately and be able to go into your banking app and actually pause an agreement with your gym, or move an agreement, or restart an agreement, or cancel a relationship you don't want to continue having? So when you actually took them through the use cases and didn't tell them how they were being powered, their sentiment turned dramatically. They want the convenience that comes with it. And I think there'll be an inflection point, as there was with tokenizing credit cards, where people then think, you know what, for the convenience, I'm happy to allow that person to have access to my data or access to my funding source. And just like with credit card tokenization, just like with wallet penetration and adding funding sources into apps like the Iconic and PayPal and so on, it just naturally progresses over time. And, I try to explain it to my dad by saying his favourite store is eBay. And I say, when you purchase from eBay, you don't have to put your details in again anymore, do you? It just knows who you are and puts the payment in where you want it to be. And he said, yeah. I said, that's because they've stored your data. This is no different to that. It's serving you a purpose. So
I think I might jump in. I think what's really important is about giving consumers visibility and control over their data, over their payments, and them feeling that I've actually got power, that if, I'm not comfortable now that that's how my data is being used, or that, I'm paying for this service, I can actually do something about it. So it's kind of empowering them as well, I think, is really important as part of this journey. And I think there's also an important role around kind of informing and educating as well, because it is change and that takes a little bit of time. But I think when you kind of work through that process with people, they see the benefits.
I think, sorry, I'm getting so excited. I think with the big billers in particular, where there's a lot of direct debit penetration today and BPay and things like that, though that particular vertical is ripe for disruption with real-time payments, not only because of the real-time payment mechanic itself, but also the fact that those industries are diversifying, they are becoming more consumption-based, and they do need that data to come through to serve their customers better. And I think, if the one or two of these big billers that have 4 to 5 million Australians using them, once they turn on Pay2 or adopt an open banking strategy, then you've converted a fifth of Australia overnight. Once that starts to happen and it starts to penetrate more and more, it'll just become every day.
Yeah, I agree. I mean, I think that kind of there is a little bit of a leap of faith. It's kind of a smaller leap for some and a bigger leap for others. And I guess there's that combination of kind of trust that you can build through kind of communication, information, kind of the regulatory settings and just how things work. And I guess things work smoothly in the beginning. There aren't any kind of consequences, negative consequences. That's going to improve take up and confidence in the system. So
QR codes are a really good example of that, right? I'm the Jerry Harvey of QR codes. So back when I was at Braintree, someone was talking to me about QR codes and I was like, that is never going to fly. That's ridiculous. Who's going to use that? And then we move into, then they started to get adoption, particularly throughout Asia, and then COVID hit, and all of a sudden my dad's like the QR whiz. Like, so this is how it will happen.
Yep, no, totally agree. So let's kind of look a little bit to the future. and what's to come. And I guess maybe I'll come back to you, Carol, and recognising kind of the steep innovation curve of this industry. What might kind of value look like in the future for payments?
Yeah, so for me, it goes back to the core of that assisted living piece. And, for the first time, bank account, thanks to Pay2 and open data globally, gets to swim in the lane of credit card schemes. And at the end of the day, there's no more accessible funding source globally than a bank account. Not everyone has access to a Visa or a MasterCard or Amex. Not everyone has access to a PayPal wallet. So from a customer penetration standpoint, and just with the rate of open data globally, with 58 countries now maturing with open data, that is the most reliable and robust funding source and information source that we have. And so I see a world in a couple of years that is that assisted world. That's the world I want to live in, where those micropayments are happening in my life every day with my control. And I see the death of cards. I actually don't see a place for credit cards in that world.
I love assisted living. I can't. I need all the assistance I can get. So yeah, really looking forward to that. I will go to you kind of on that topic that Carolyn touched on, Demir, because obviously kind of there's a potential, not just a potential. There's a certainty of future disruption, kind of as the industry innovates. So how could that impact, do you think, on the more traditional players?
Yeah, look, I think what we've the from a technological standpoint, what's been happening over time is that we've taken this black box called a bank that is able to facilitate payments, is able to store funds, that is able to give us credit, and so forth. And what we've been doing gradually is adding API by API. So all of this infrastructure that they've always had is now accessible programmatically. Traditionally, they didn't have that capability, so we would have to rely on other schemes and other networks. But it also means that we're really kind of wedged into the technology and the platform and the protocols. We've abundance of API services for both data and payment execution, with the capability to be able to execute real-time payments and also being able to acquire data. All of a sudden, it becomes less relevant around the technology of the platform that you're using, and it's more about we get closer to the value of what we're trying to build. So no more of that is like you have to do it this way. You've got choice now, and I think that and each one of them has something to offer that's kind of quite unique. And there's no doubt about it that there were definitely some deficiencies within, from a banking perspective, of the services that we're able to provide that maybe force us to some other kind of protocol. But now they can compete just the same, like we're in that region. So I think looking at it from that point of view, what we're kind of saying is that less relevant about whether I'm using cards or bank. I just want payments. Less relevant around whether I'm using, how do I acquire data? Is it going to be for here? This, I've got the APIs for it, and just a more kind of, from an efficiency point of view, enables us as an industry to focus on the key value.
So, Katrina, the NPP is a great example of collaborative innovation. What do you see in the future in context of kind of platform and product innovation?
I'm really excited, I think, about what the next couple of years is going to bring. I mean, I think with Pay2 and the delivery of that, and there's a lot of people across the industry, some of whom are here today, who have played a really important role in that to bring it to life, because it has been a true collaboration. I mean, it's involved over 100 organisations doing work with their payer customers and their banking channels and their back offices, as well as with payment initiators as well, who want to be part of that journey. And I think it's just going to completely transform what you can do with the payment, to the extent that the payment piece will go away. We won't consciously think about making a payment, because it'll basically be, I can set up a Pay2 agreement and provide my authorization, and those payments will just happen as and when I do those actions that, according to what it is that I'm trying to do, whether I'm a business or a consumer. And I think it'll just kind of disappear into the background, and then it will be about how do you make things more efficient from a process perspective and deliver better customer experiences, and then what can be done about moving money around kind of in real time from a financial management perspective, or for a small business, for a large business. I think that's going to be truly innovative, and that's when we're really going to see the benefits. So.
Thank you. Look, we've got only a couple of minutes left, so I mean, you've seen how dynamic this panel is. It's fabulous because I haven't do anything. So thanks, guys. There is opportunity for a question, maybe two, if anyone's got one for the panel. Coming. Or you could yell if you want.
Yeah, I can go. So my Ben from Basic, so I'm not going to ask you a question. Well, I'm Gen Y, and I still think that 9 times out of 10, for a Everyone hear me? They provide their BSB and account number to facilitate the payment. I guess what's the role, Katrina, of NPPA or the major institutions that offer PayID as a service to increase adoption of that convenient service, similar to what you get with Beam, a great app for peer-to-peer payments?
Yeah, look, it's a great question, one we get asked quite a bit. So PayID's been around for about 4.5 years. Look, I think we're on a journey. I think it does take time to kind of change some of that customer behaviour. I think increasingly we're seeing a bit of a tipping point though. So we're up to about 12 million PayIDs registered here in Australia. And I think it's both sides of that interaction, because it's not just about me making that payment and saying, have you got a PayID? Can I use that to make that payment? Because maybe if I paid you before, I might already have your bank account details. It's stored. I just do it the way I've always done, because why do anything differently? It's also about, on the other side, that if I want to receive payments from someone, whether I'm a consumer or a business, that I'm offering my PayID and say, hey, look, here it is. And I think there is more work to done, particularly on the business side, and particularly for small businesses, because PayID is a great payment option for them, because you can get your money in real time. The person that's paying you knows they're paying the right person. I'm renovating at the moment, and it's driving me insane because everyone uses BSP and account numbers. So I'm on a mission. And I think what's interesting, we've done some research that once people actually use PayID for the first time, they become a convert. And interestingly enough, a lot of them learn about it in the moment when they are making a payment, and particularly when they're paying someone they haven't paid before. And so I think it's going to be a collective journey in terms of what we might do, and we are looking to do some centralised kind of activity coming very soon, so keep an eye out for that. But it's also going to be about what the banks do. I think the role of payment service providers as well, who are using PayID more from a receivables perspective, and everybody in terms of to try and drive that change, because it will take a bit of time. And it's also about, how we get key intermediaries who play a role in the payments process, the likes of a Xero, for example. How do they start to capture PayIDs or when they're making payments or getting involved in that payment process? So
I sense, and I'm going to make this the last question because I sense Carolyn wants the last word on this, and obviously Katrina's tradies are signing up for PayID as we speak. So, Carolyn, do you want to kind of make a comment about that question?
Yeah, I'd love to. So Zepto has spun up about 13% of those PayIDs, so it's something pretty close to my heart. And one of the things that I think will help drive adoption is the fact that for the first time businesses are starting to look at PayID as a natural way to accept payments and a faster, cleaner way than, say, a BPay with fat fingers and 3-day wait period and all that kind of stuff. And one of the innovations that has brought that to the forefront is the fact that companies like Zepto and Maneuver and others have started pooling or mining PayIDs and can spin up. This week we had a new merchant on board and we spun up 100,000 PayIDs in under an hour. So that's possible now. Whereas when PayID was released, its function initially was peer-to-peer payments. Only 10 PayIDs can be spun up in under any given minute on the NPP infrastructure. So we constantly mine them and pull them in the back like a leaky bucket. So now it has an enterprise functionality to it, which will drive adoption.
I'd love to offer some more question time because I think there'd be some more questions, but I can't because this is a speed dating session on the real value of payments. I'd really like to thank the panellists. They've just been amazing. I'm pretty sure they'd be happy for me to offer them up at a break for a question if you've got one. But from my perspective, really like to thank them for their contribution and to thank you all for attending. Really appreciate it.
Thanks very much, guys. We'll give it a few minutes and wait for our next panel to come up. Thank you, that was great.
Yeah, well done. Yeah. That's my last official gig. I'm off the book.
Thanks, everyone. We'll get started on our next panel. So our next panel today is all about open finance and unlocking new opportunities. On the panel this morning, we have Simon Doherty from Frollo, Emily Martin from the Treasury, Daniel Javevsky from WeMoney, and moderating the panel, we have Lauren Applegate from Yodlee. Welcome to you all.
Good morning. I hope we're all feeling energized, maybe over caffeinated already for day 2 of Intersekt. Welcome to today's session. So we're covering open finance and unlocking new opportunities. I'm Lauren Applegate. I am the Director of Customer Success and Marketing for Investnet Yodlee for Australia and New Zealand. I'm sure many of you are already familiar with Yodlee, but for those who aren't, Investnet Yodlee, we are the leading data aggregation and analytics platform. We have been in the market for over 23 years, have over 1,500 customers within Australia and around the globe, and over 30 million connected end users. We are an accredited data recipient and intermediary under the Australian Consumer Data Act. And our solution and our hybrid approach to open banking is to give fintechs the most comprehensive access to data, to both CDR and non-CDR data. And I'm very privileged to join an esteemed panel here today. So 2 of which I'm actually very lucky to have had the pleasure to work closely with for the last few years. So please join me in welcoming Dan Javevsky from WeMoney, Emily Martin from Treasury, and Simon Doherty from Frollo. Now, I would like to hand over to the panel, and look, this is a subject that's very close to Investnet Yodlee and works very well with our business ethos. So we are all about empowering businesses and consumers to live their most intelligent financial life, and that's through access to data and innovative technology. So I'll just hand over to the panel now to introduce a bit more about themselves and their businesses. Dan, would you like to get us started?
100%. Well, great to be here, Lauren. Dan Javevsky, founder and CEO of WeMoney. WeMoney is a social financial wellness platform that helps Gen Z and millennials crush debt and get ahead in their financial lives. We're 21 months old with 330,000 downloads. My prior life was also in FinTech. We had a company called Switch My Loan that we built, scaled, and exited in 2016.
Thanks, Lauren. My name's Emily Martin. I head up the policy and engagement branch in the consumer data and digital division at the Treasury. So my business is policy advice and engagement. And Treasury is the lead agency for the CDR. We provide the advice to the Minister on the new sectors and the new functionality for the CDR. And we also make the rules and have overall responsibility for the program, but work very closely with the other CDR agencies, the ACCC, the OAIC, and the Data Standards Body. Thanks.
Thanks, Lauren. So Simon Doherty, Frollo. We're a purpose-driven fintech, and that purpose is to help people feel good about money. We do that in both a B2B and a B2C context. So in the B2C context, we have our own Frollo app. It's free for you to go and download if you want to. And then so we don't commercialise that app at all. In the B2B sense is where we do commercialise the business, and we build open banking powered solutions right from collection and consent of data through to helping people deliver customer propositions to market. We're the first fintech accredited under the Consumer Data Right. So we've been working with the data for about nearly 2.5 years now, which has been an interesting journey, and hopefully we can talk a little bit more about that today.
Thank you, everyone. Well, let's just dive straight into the heart of the conversation today. So I'm interested to hear from the panel, what are the new opportunities which CDR has unlocked for both the consumer and fintechs? Dan, would you like to start?
Yeah, I'd love to, Lauren. And I think, open finance, open banking, it's a big topic, for a lot of people to consume. But I want to take it down to the human level about a real Wee Money member that's gone through the experience of managing their finances. Emma from Brisbane, a 35-year-old single mother of 2 beautiful kids. She works 3 jobs, not because she wants to, but she has to. She bought a property 5 years ago, and the stress of a mortgage and those repayments elicits the same effect as if she were to sit in a doctor's office to wait for a biopsy result. And that's a very painful experience for a person like Emma. And I think the future potential, for Emma in her experience with managing her finances with open banking is that instead of her thinking about refinancing her mortgage right now, which she would rather go to a dentist, have her teeth pulled out without an anaesthetic, than go through that very painful journey of going through that end-to-end process of switching her mortgage. And if we think about what open finance can do for Emma in the future, is that she wakes up one day, goes into the Wee Money app, receives a push notification that the RBA has increased the interest rates yet again. And instead of her feeling disempowered about that entire journey and process, she can scan the marketplace for those cheaper alternatives and with an press of a button, take her mortgage from 4% to 3% and save herself over $3,500 per year. Now, that's important for Emma in a very, very big way, because one of her goals that she's had in her life is to take her and her kids on their first international trip. And that's something that she couldn't do before because of the thought and the process of potentially going through that very painful journey of switching a mortgage has now been evaporated. And that's what we see the future potential of open finance, is these very quick, instant processes of people being able to receive value rather than those very archaic processes. And I think, we all are, Emma, to a certain degree. We pay this excessive loyalty tax to a lot of banks and financial institutions. And that's a story that many Australians also share as they navigate through their money and their finances.
Great, thank you. Simon, would you like to add?
Yeah, and I think that's a great example. I think CDR does unlock examples like that really well. From the FinTech perspective, things, the customer experiences that Dan's kind of talking about is what FinTech does really well. And what CDR brings to that is just the ability to have speed and reliability of data. And that's important because if you're building an experience based off great data and you can't get it quickly and you can't get it reliably, you're not going to be able to deliver the experience that you want. And I guess the last couple of years of us working in CDR is that we've seen that it's been an evolutionary process, but we're now at a point where that speed and reliability is there. It enables fintechs to create great experiences and to have confidence that the data is going to be able to help them deliver the customer proposition that they want to. From the consumer's perspective, I think it's really important, and the consumer data right's all about security and control for the consumer in their data. And why is that important for the consumer's perspective? So we have in our app, both in our consumer app, we have both screen scraping and CDR data. We've started with screen scraping, and then as we've developed the consumer data with the consumer data right, we've been able to now ingest about 70% of our data comes from CDR. And what we see is a very distinct difference between the screen scraping journey and CDR. So we're getting about a 50% higher conversion rate of people linking their bank accounts when they go through the CDR data path. And so what that is for us, it's a real proof point about the security and control is important to people. And why is that important then to fintechs and businesses? Well, that's important because they know that they're going to get more successful use cases, more successful customer propositions if they build them off CDR data.
Great, thank you, Simon. Well, you've already touched on it to begin with. That this is about what outcomes and you've experienced already, so successes or challenges with having CDR data. And I know both yourself and Wee Money already have CDR on your platform. Can you talk us through a bit more of the successes and challenges that you've seen?
Yep. Look, the challenges, I think, this is probably the 6th session on CDR I've been to at this conference, so it's definitely a hot topic for Intersekt this year. And the challenges have been discussed on quite a few of those panels. So, but really, I think for me, they all come down to what is a very complex regime, and how that's had to be rolled out. So it was never going to hit on day one and be ready to go. So things like the complex data structures, the accreditation process, all of those have had to be worked through. I guess what we see now is that's all in place. That's all there. It's all ready to go. And in fact, we're delivering it into the market through a variety of use cases. So it will continue to have challenges, but I think all the big ones now have been knocked over. Certainly our experience is that they have been knocked over. And then if I flip over and just concentrate on where the successes are, again, it's the speed and reliability of the data and the ability to use that to deliver compelling customer propositions. That is there today. We see about a 98% success rate of API calls, CDR API calls. And the speed of that is around sub 1 second on average. And don't forget, we're going out and hitting up to 110 banks, and we're getting that data back super quick. Great stats, but again, they are what are going to power genuinely compelling customer propositions. And that, I think, is really going to be the success of CDR. Just final point, certainly in a lot of the sessions that I've been in, there's been discussion about, well, the consumer doesn't really understand open banking, doesn't really understand what the consumer data right is. As it expands into energy and telco, is it going to be important that the consumer understand what it is? From my perspective, it's not. The consumer data right is going to sit in the background, and it's going to empower great experiences for consumers. And that'll be bringing together, really compelling data sets really quickly and being able to create compelling customer propositions from that.
Dan, would you like to add?
Yeah, 100%. Look, I think for us, the journey of accreditation was a long one, but I think useful because it's the start of a new process and a new regime, and that process, I think, was tough on purpose in order to get through all those barriers to get to accreditation. But we've been through that now and live now with 10 open banking organisations. I think just to add on what Simon mentioned is that CDR's got great literacy. In fact, we're surprised by the degree of literacy that a lot of our members know about the CDR, and in fact, they've sorted out. I think there's people in two buckets. There's people that will just sign up to WeMoney, go through the process, connect their accounts, and then, hey, it works, all good. And there's other people that have been waiting on the sidelines for CDR to be implemented in order for them to become a WeMoney member. And so we went live in July, and we've seen a massive increase in people now connecting their open banking accounts. Look, there's a few little issues and gremlins with the data, but I have to take my hat off to the government and everyone else that's been in that ecosystem, supporting that process of providing that feedback so we can fix and resolve all those issues, which is bound to happen with any new program. So for us, it's been nothing but a success for our members, and we look forward to the evolution of it.
That's great. And look, it's good to see actual FinTech innovation come out of the access to data. And that's the entire purpose of the consumer data right, which is ultimately going to benefit consumers. So it's good to see. From an investment Yodlee perspective, we're all about bringing every single piece of data possible to that consumer experience, which is why we offer still today, I suppose, a screen scraping approach as well as CDR data. So it's all about superannuation and investment accounts that aren't yet available via CDR, but we're looking forward to when it is. So on that note, Emily, I would actually like to expand to you. So as we're expanding outside of just open banking and into open finance, can you talk us through from Treasury what we can expect in that rollout?
Yeah, sure, Lauren. So it is a really exciting time for the CDR in terms of the expansion. As Simon mentioned before, the next sector that we have coming on is energy, and it will be followed by telecommunications. And then we're moving into open finance and unlocking data sets in non-bank lending, general insurance, and superannuation. And really, the move to open finance came from a strategic assessment that the Treasury undertook and really looked at those data sets that would be able to complement which was what was already in the system in open banking, but also data sets that would bring real benefits to consumers in terms of them seeing their full financial picture. So bringing together all of these important data sets to see what their financial picture is so that they can do some financial planning, they can make good financial decisions, and the innovators in the sector can come up with the great products and services that will enable them to do that. So At the moment, we have a non-bank lending designation instrument out for consultation. So if there are non-bank lenders in the room, would really encourage you to get involved and provide feedback to that process. And then we'll be progressively rolling out into superannuation and targeted data sets in general insurance. The strategic assessment also provided us with really good feedback from industry and stakeholders about the CDR being flexible and agile, being able to bring in targeted data sets that will offer the most value for consumers. So we are taking a more targeted approach when we start moving into superannuation and general insurance. I think I'd just also like to mention we're really excited about the benefits of combining data with action initiation. So we have, the Treasury has begun work on action initiation, and we expect to release exposure draft legislation to enable action initiation very soon. So I would also encourage people to get involved in that process. And also on the horizon, we have the statutory review. Treasury supported Elizabeth Kelly, an independent reviewer, to undertake a review of the statutory framework. And I can't go into details about what's in that report, but I can say that Elizabeth really recognised the value that we get from businesses and innovators in coming up with those products and services for consumers, and that the consumer is really, at the end of the day, in the centre of all of this, and we're all working towards having those benefits realised for consumers. So I'd also encourage everyone to keep an eye on this space, because we expect that report to be released in the coming weeks.
Do you want to give us an idea of how Pay2 is going to work with action initiation, Emily? Because I'm dying to know.
Okay, well, I think you need to come to our action initiation roundtable later, where we will talk in a little bit more detail about action initiation, the legislative framework. I don't think we've worked out how action initiation will work with Pay2, and we're really looking to get feedback and ideas from stakeholders and industry.
I think Simon's jumping the gun a bit there. We do have time for questions at the end, and I'm sure a lot will be directed to Emily. Just on that note, and I'm interested to hear from all the panelists on this. So with knowing what the future is potentially going to look like with CDR, how can FinTech and regulators continue to work together to ensure we have further success on this?
I'll jump in first. It's absolutely crucial for us that we as CDR agencies, so the Treasury, the ACCC, the Data Standards Body, that we all work really well together, but then that we also work really well with industry, that we get the feedback that we need from FinTechs. It's such an interesting, from a policy perspective, it's such an interesting policy space, because we're providing policy advice, we're building this, we're operating it, we're maintaining it, we're regulating, we're doing all of that at the same time. And so feedback has to be constant. We really value when FinTechs get in contact with us with great ideas, when they want to feed into processes. And we've had a really good relationship with a number of FinTechs where we can have really informal conversations before we're getting to formal consultation processes. And I think that's really important, and we'd really like to continue those relationships.
Yeah, and I don't want to make this a love fest, but but I do agree with Emily, and in fact, because we now have multiple use cases live in market, multiple types of consent flow within each of those use cases as well. And the way we've been able to do that is working with Treasury and the ACCC. So, I'd encourage all FinTechs to think about what your ultimate customer proposition needs to be, construct it how you want to see it, how it's going to work best for your customer experience, and then bring it to Treasury and the ACCC and say, this is how we want it to work. There's obviously going to be a regulatory framework that's going to sit around that, but we've found there is definitely flexibility in creating the kind of experience that you want to deliver to market.
Great. And look, from Investnet Yoli's perspective, I think it's been beneficial for us to work with the ACCC closely in providing that feedback and submissions, which has always been openly received. So we thank you for that. What we can move to, if everyone's open, is we've got a good 10 minutes, and I feel like we've got some good questions sitting out there in the audience. If we'd just like to open up for anyone who would like to ask some questions. Down the front here, please.
I think this is, as I said, I think this is probably the sixth CDR-based panel.
In some of the previous sessions, people have been saying they'd love to see more talk and more encouragement participation of small businesses to exercise their data rights. Now, it is called the consumer data right, so I think sometimes we forget that small businesses are part of this ecosystem as well. I'd just be interested on some thoughts as to, what do you see as possibilities or interesting, or, maybe something you can say about how small businesses can get more involved?
We absolutely include small businesses as consumers in the consumer data right, and we really recognise that there has been some barriers for small businesses to participate. It's been a really strong theme and strong feedback that has come through the statutory review process. So I would say, when that report's released, have a look at the recommendations and findings there that relate to small businesses. But it is it is particularly something that the Treasury is focused on at the moment, and I think we'll have some rule changes that we'll be socialising soon that will hopefully help small businesses participate in the consumer data right.
Thank you.
I can just add a little bit to that, Jennifer. It's a good question. So we, in the B2B context of us working with other businesses, we've certainly been approached by other fintechs that work with SMEs. So there's definitely interest. I don't think they've landed on a compelling use case yet to be able to deliver. And there's also the fact that it has been kind of pushed as the consumer data right has maybe not given them a great confidence to come forward. So, but there's definitely interest out there anyway.
And a question down the back.
Yeah. Hi. I have a question on exactly opposite of what we are doing. So we are talking about consuming data and making more insightful decisions on behalf of customers. But where does it end? There are banks who would not give you a loan if you had afterpay payments in your last 3 months. Then there are insurance companies who avoid your insurance if you drive too fast, or if you buy smokes, your health insurance is void. Where does it end? Where's Big Brother not watching you anymore?
That is the exact opposite. I mean, we're talking about consumers having choice and control about how they share their data. We're certainly not talking about big companies and corporations having the choice and control of that consumer data. So, if a consumer wants to share their data to get a better deal, that's what they can do, but they're not forced to do that under the Consumer Data Right.
And probably just to add to that, I think it helps with situations like responsible lending, for example. So it's not to the detriment of the consumer. It's more about having the right data and being able to make a responsible lending decision of whether they can afford that mortgage and that loan.
Yeah, I think just one thing I'll add to that is that this is the biggest problem now with people going to apply for financial products, is that they don't know what information they need to provide in order to become approved for a loan. So if you submit a mortgage application and somebody at a big bank has got their red ruler out and found out that you went to Uber Eats and got some Mexican last night, is that going to affect your home loan? And I think that process will actually be untangled with open finance, because if you think about the problem that consumers are trying to solve, is they're trying to find the best possible product at the best possible interest rate that suits them. And with more data in an open format, that discovery for those products becomes a lot more easier. And so instead of you applying to one bank, becoming declined, applying to the second bank, going through that same painful process, is that you automatically be provided with that option that suits you, that you'll be able to be approved for, as opposed to waiting very painfully, am I going to get my loan approved or not? So I think open finance actually solves a lot of those problems that we've experienced so far with examples that you've just mentioned.
Question down the front.
Hi guys, this is probably a question for, I pointed at Emily, but everyone can answer. It's more about just open banking and the adoption curve. At the moment, it's still early days. All the banks are just working to comply. How is Treasury thinking about driving adoption once everyone's met those compliance hurdles? Everyone's now a data holder. Is there any intention to kind of, I suppose, force more adoption into the CDR?
What we hear from data holders who have come through the process is that there is quite a burden in terms of compliance in becoming a data holder and meeting the obligations. And I think we've come through that stage, and it's now that we're seeing data holders turn their minds to becoming accredited data recipients, and that's where they'll get the value. And it's also really important to us that we continue to expand the CDR and the data sets that are included, because we believe that will drive more products, more services. And when we have more products and services, that will drive, more participation. And then again, we also think that action initiation is going to be a game changer for the CDR. So bringing, we heard in the last panel talking about the power of bringing data together with that ability to act on the data will be really powerful. And again, it's products and services that are going to drive participation in the CDR.
Maybe I'll just talk to the first part of that, which is about the lack of adoption. So you mentioned powers. My mate Nick is an elite rower, and he rowed at the Olympics. And he was telling me once about how they go faster in the boat. And it's about the framework that they already have. It's about their technique and their stroke rate being the same. And then when they want to go faster, they just feed power into that framework. So I think, in our experience over the last couple of years, we've been building that framework. We've been getting everything in place. It's definitely all there now. 110 banks, the kind of speed and reliability of data is definitely there. We're seeing it being deployed in use cases. It's really just now about feeding power into the ecosystem and the framework itself. And that means that, fintechs need to be a little bit brave and start to deploy use cases. To your point, Emily, we work with banks as well, and we see that the conversations we're having now are very different to where they were a year ago. Banks are now coming through the compliance hurdle, the fog's clearing, and they're coming up, and now they're coming to talk to us about, okay, well, what can we do on that data recipient side? And they're actually doing that because of the level of investment they've had to put into becoming a data holder. They're like, well, actually, we need an ROI on this thing now. What can we do? How can we ingest that data and actually do something with it? So I think the next 12 months are going to be super exciting. In a way, our focus is to get what we've got in front of us now moving faster. And Emily, I guess your role is to continue to expand ahead of us and bring in these new data sets and expand the kind of use cases that can be delivered and the kind of value that we can deliver for consumers.
Great. And I think we're almost at about time. So I think I might just wrap up with one quick question for you all. If you'd just like to explain one point of what you're really excited about looking for in the future of CDR. Who would like to start?
I'll give it a go. I think to the point before about the story about Emma, I think that's probably the most exciting parts. And I think if we just draw the lens right back and look at it from an Australian context, there's a number that we should all be proud of, which is that 8% of Australia's GDP is in financial services. Now, if you think about that, is that all the cost that is gone into banking in order to deliver financial products to everyday consumers is basically been eaten up by the financial system. And I think what open finance can do is lower down that cost curve through competition to drive then that economic surplus to be transferred from the banking sector now back to consumers. So the story like Emma, if they're saving $3,500, that can be for everybody. And I think Australia will be in a much better place for that. So really excited about the future of open finance and what it can do to unlock a better financial life for all Aussies.
Great. I think what I'm really excited about and what I've heard a lot about over the last kind of day or so is what this will mean for consumers, that consumers actually will have a real alternative to data sharing that is safe and secure, where they have control, they know for what purpose they're sharing that data, and it can make a real difference for them in terms of convenience, choice, and making good financial decisions. I think consumers have been pretty angry about how they've been forced to share their data to get access to products and services. So this will be a real alternative in the future, and I'm excited to see, when we actually get to that point where consumers, maybe they don't know they're using their consumer data right, that's okay with us, but it's there and it's working for them.
Yeah, and I'm excited about new use cases. So the two big ones in the market, I don't think are any secret, which are data aggregation into PFM or financial wellbeing, and then the lending use case. Those are the two dominant ones in the market at the moment that people want. But I think there's some incredibly exciting, lighter and simpler use cases. Those two big ones are actually pretty hard to deliver from a data management perspective. And things like just delivering a consumer a real-time, genuine insight from a very rich data set that can include energy and telco and finance. That's going to be really compelling, I think, and I'm really excited for the types of use cases that hopefully people in this room are going to help us deliver to consumers in the future.
Great, thank you. Thank you so much, everyone, and please thank our esteemed panelists for the discussion today.
Thank you, guys. That was great and very, very exciting stuff happening in the open finance world. It's now time for morning tea, so feel free to head on out and we'll come back at 11 for the next session.